Welcome to Market Maverick Talks, a father and son podcast examining today's most innovative companies. Before we start, please make sure to read the full disclaimer in the notes below. We are not financial advisors, and anything we say should not be taken as formal advice or a formal recommendation. Welcome to today's episode, in which we will be analyzing a company that operates as a bank, a marketplace, and a payment solutions provider, all rolled into one seamless, ridiculously profitable package. I know what you are thinking, and no, this is not another video about Mercado Libre. Rather, this company is Kaspi, a Central Asian-focused company trading at 1/8 the market cap of Mercado Libre. But now, Kaspi is beginning its path to expansion to other geographies. Currently, Kaspi operates mostly in the Central Asian country of Kazakhstan, in which it was founded in 2007 and is now the largest payments, marketplace, and fintech ecosystem in Central Asia. One statistic that emphasizes how essential Kaspi is to the country of Kazakhstan is that the total population of Kazakhstan is roughly 20 million people. Of that, roughly 15 million people are monthly active users, an incredible 75%. Now, of these users, they on average transact 73 times a month, which is more than a North American user of PayPal does in an entire year. And to emphasize the benefit of Kaspi being a super app, we can look at how diversified its revenue is. Looking at their revenue breakout for the first quarter of 2025, and it shows just how many different ways Kaspi can make money off a single user. Their largest segment is Fintech. This is a platform that allows users and merchants to have a credit decision within a few seconds. And as you can see, it makes about 50% of its total revenue. Another segment is Marketplace. This is their e-commerce and travel platform. It's similar to Amazon, and it makes up about 29%. And their smallest segment is the payment revenue. This allows peer-to-peer payments within the app, or also globally to any Visa or MasterCard. And it also allows bill payments to government services or for online or in-store payments. As you can see, it makes about 20%. So these are the three segments that Kaspi really reports in: Fintech, Marketplace, and Payments. Now, to examine their current financial picture, we looked at their latest quarter release back in May 2025, and the numbers are looking favorable. Revenue continues to increase at greater than 20%, at 21% when excluding Turkey. Ideally, the profit will continue to grow faster than the revenue, as that will support the thesis of Kaspi's operating leverage, but it is still growing at a solid 16%. This is for a company with a trailing PE of roughly 8. Their future guidance, updated in the last quarterly release, also looks favorable at roughly 15%. Now, it was called down from 20%, which is a little bit of a reason why the stock has been down. But 15% is still very solid in a tough macroeconomic environment right now. It just demonstrates how sticky the super app is in their home market of Kazakhstan. Looking ahead, three things I'm going to be monitoring about Kaspi on whether or not it will meet my thesis is, first, their Turkey expansion plans. So right now, they're a 16 billion market cap, and 99% of their business is in Kazakhstan. If this company is really going to grow, it needs to grow out of this region so it can increase its monthly active users. So with Turkey, in the last quarter, they just acquired a majority ownership stake in Hapsabarada, which is an e-commerce leader in Turkey. And they've also acquired Rabobank's Turkish subsidiary. Together, these are the early steps for building an integrated finance and e-commerce super app that has helped them excel in their home market. Kazakhstan has a population of 20 million. Turkey's population is roughly 90 million, 4.5 times larger. So if this can work out, this is going to be a major reason for I believe Kaspi can outperform the market for my portfolio. The second I'm going to monitor is whether or not they revise their revenue guidance on upcoming earnings updates in August. Right? They called it down from 20% to 15% related to a new rule regarding imported smartphones that really made it tougher for demand and for people to buy smartphones. And they also cited tough macroeconomic environment. Right, this was in May, right after the U.S. tariff announcements. So that was a common theme back then. Ideally, we really see them to start beating and raising revenue, but it will be a concern if they call down revenue guidance again. And the third thing to monitor is, they're going to be focused on expanding, really making sure that they can grow in Turkey and possibly Uzbekistan. It's another country with roughly 35 million people, so bigger population base than Kazakhstan. But Turkey is really the emphasis. But they can't forget about their home market of Kazakhstan. So they got to continue to excel in their net promoter score, customer satisfaction, releasing innovative products to their home market, and really I'm going to be monitoring their monthly active users. Right now they're about 75% of the population of Kazakhstan uses this app. I really want to see that stay. If we start seeing a trend where that drops, that will be something I'm concerned about. And that's a little bit about Kaspi. So let's ask my dad. Hey John, how are you doing?
Well, I'm well. Yes, for Kaspi, it's in a similar industry group as C Limited, SE, Amazon, AMZN, Mercado Libre, MELI, and Coupang, CPNG. It does 75 transactions per month. The average user does 75 transactions per month. It cut its dividend recently, and I believe it's so they can expand into Turkey. I think that's why they cut the dividend recently. Let's see. I get looking through the analysts I follow. There's 2 buys and 2 sells for Kaspi. Okay, and let's see. The 50-day moving average is at 84. The 200-day moving average is at 96.13. So it's right in between those. So that's a good sign. It's not overbought. That's my quick thumbnail statement on Kaspi.
For you, John, is the analysts you said they seem pretty favorable. You're a big fan of their expansion to Turkey. What do you think is their biggest risk?
Their expansion into Turkey. I think that's their biggest risk because maybe the things just might be different in Turkey compared to Kazakhstan. I don't know this, but I know what they're trying to do. They're trying to mimic what they did in Kazakhstan and expand into Turkey, but you don't know if things are the same. That's the biggest risk I see. And also that they missed out of the last 4 quarters, they missed their earnings on 3 of them.
Sale, what's analyst sentiment? What are you thinking?
Well, this is from Zacks, and Zacks is, generally speaking, I think it's like a 3 to 6 month look at things. So they have a sell rating, and that doesn't really necessarily mean to sell it, but it kind of means that you got to keep an eye on it. So that's my opinion on the Zacks one, but that's just short term. That's a short term rating, and I'm looking at Kaspi more for long term. Okay, this one is mainly I had this slide to show that the earnings is coming out in August 4th, before the market opens August 4th. And generally, we could do our presentation later on whether we want to buy it or not or accumulate. But generally, I like to, sometimes if I really believe in a stock, which I do in Kaspi, I like to accumulate a little bit, maybe a third of a position, a quarter position before earnings, and go from there. So that's why I presented this slide. Okay, the balance sheet. I just wanted to do this one to say that the total debt to equity is 9%, which is not that bad. I'm not concerned about that in this company, in Kaspi. This is the one that concerns me a little bit. I don't like to see 3 out of the last 4 earnings being missed. This is a little bit of a concern for me, but like I say, it's long term, and you got to look at the big picture, and you don't have to buy your full position right now. You could buy bits and pieces and stuff, but long term, I still think it's a good stock. Yeah.
think about my thoughts on it, right? I really like to look at companies and think about long-term value, right? And one aspect of that is it founder led? Is their CEO a general, just an operator? Or is the CEO have a vision? And one thing I love is, Kospi, they started back in 2006, 2007 during the great financial crisis and really started their digital transformation in 2008. And I read an article in the Harvard Business Review, August 2025 issue, and their CEO is phenomenal. It reminds me a lot of a company we're going to probably do in a future episode, Nubank, but just their long term, their customer centric focus with innovation, right? From really reading that article, just helped me really understand of just this customer obsession that Amazon had, that Nubank has, where every month he collects net promoter scores, and they listen and they use that to iterate and generate new innovations, right? They have 50 different product teams that all they do is just listen to customers. They set up their own initiatives, and every quarter they're expected to really introduce a high quality add-on to the product. So they're innovative, they keep the customer in mind, they measure themselves by net promoter score, and their net promoter score is in the 80-90 range, which is pretty darn good. So I love that long-term focus. One story from the Harvard Business Review issue that really stand out to me was, you know, credit cards. When you think of fintech companies, everybody has a credit card. So why does Kaspi not do one? And it's really because a net promoter score, right? Their CEO said at the time credit cards were about a third of their profit, but it had a negative net promoter score, so he cut it. So that type of stuff just takes courage and long term focus. So I love the founder led initiative of it. I love that they're extremely sticky, right? That they're doing so well in Kazakhstan. And I understand, right? Anytime you move to another country, maybe it doesn't do well there, right? They're just starting. Where Superapp, they didn't do good in Turkey. They aren't the market leader. Alibaba has one in Turkey that is called Trendoil. That's the leader. Um, but what I'm hoping is right now in Turkey, there really isn't a a a super app, right? Somebody that has that marketplace plus the fintech. If they can bring that integration, I'm hopeful that they can really grow. But really, the big thesis for me of why I like Kospi right now for our portfolio is, I love the long term initiative, but I love their value, right? So back in 2024, there was a short report that came out in September that accused Kospi of aiding Russia to violate economic sanctions. Um, and Kospi immediately came out, right? Even though the stock plummeted, they said, no, here's the facts. 99.6% of their revenue originates from Kazakhstan. Only 3% of total accounts were from people that were outside, non-residents of Kazakhstan. So I feel like there's the data behind it, and Kazakhstan, trades with China, trades with the U.S., trades with Russia, and at some point, right, like that is a risk, and it's a risk for many companies that operate in Asia. But I think it weighs in on their valuation. So we can look through my valuation slide a little bit, but just looking at it, 15-20% revenue growth, PE of 8, market cap of 16 billion. That's if they can execute in Turkey and they demonstrate that right now they're executing in Kazakhstan with Kaspi, with 20 million people. They have 75% of the population. Turkey is 4.5 times. So it's an 85 million population. Perhaps they go to Uzbekistan, 35 million. That's what speaks to me of really the thesis of just they're extremely profitable. And if they can copy that model in just one other country, it can give asymmetric returns. And then kind of just one chart I want to share is just valuation, right? So we talked about for mine where I love the long-term focus of the founder, the business is great, but why am I interested in buying it now? And that's where I looked at Kospi against two of its competitors, right? Not direct competitors, but similar companies that operate in other geographies. So Mercado Libre, right? They're a super app that operates in Latin America. Grab is a super app that operates in Southeast Asia. Grab's revenue is mostly on the e-mobility and delivery side. I believe financials only is about a small 10%, but for at least just looking at companies I've had a super app, those were the two I looked at. And so you can see, right, Mercado Libre and Grab, their price to sales ratios 5 and 7. Kospi about half. Um, Really, I'm looking at price to sales versus PE because Mercado Libre and Grab aren't optimized for earnings yet. And Kaspi has an 8 trailing PE and it's going to 7. I think Turkish expansion might hurt that a little bit, but I really want to look at sales just because I think that's comparing apples to apples with um, the companies of where they really are in the maturity curve. So Kospi's about half as expensive on price of sale, but also look at those net profit margins. Mercado Libre is about 10% net profit margin, and they're at scale, right? I know they're continuously invest in the business, continue to grow. Grab's a negative net profit margin. Kospi's close to 40%. So they're even though they have a cheaper market cap, they have a greater profit margin, right? And it's because they're only in one market in Kazakhstan, and I do think that's as they expand into other regions that's going to impact a little bit. And that's really where I'm looking at the monthly active users of if Kospi at 15 million can get to Grab and Mercado Libre scale, and their profit margins, their net profit margins aren't taking a hit. Um, I don't think they should be trading at this price to sell ratio at that big of a discount. I think some of it is the geopolitical risk, right, that we talked about of the short report, them eating Russia and violent economic sanctions. I think that's part of it. And frankly, Central Asia, there isn't that much attention in stocks there. It's a niche for sure. It's not it's not like in Asia, right? Everybody knows about Seat Limited. Everybody knows about Alibaba. So it's kind of an under the radar stock. But yeah, it's one of the theses for me is just cheap. It's very cheap right now. 8 PE at an eighth of the market cap of Mercado Libre with a lot less users that if they can execute this Turkish strategy, have a not too big of a hit on their net profit, their price to sales ratio should level off. This could be a company that if we were to buy now could be 3x 4x for our own individual portfolio. So what do you think, John? What do you think we should do for our portfolio? Do we add it? Do we wait till after earnings?
I would accumulate a quarter position or a third position. Let's say that you want to put in, let's say, in a typical position for a person is 2,000. I'd put in maybe $500 or $750, maybe. I think that's a third, doing quick math. But anyway, it depends on. But that's what I would do, and then after earnings, reassess. That's what I would say, taking everything into account that we've talked about. I would do a accumulation, which is a partial position, and go from there.
Thank you for watching our very first video. If you enjoyed this conversation with my dad, John, and I, please hit like, comment, and subscribe as we really look to kind of iterate how we present. This is our first video, but we love analyzing companies that have long-term value and just talking about it. So we'd really appreciate if you subscribe as we aim to target weekly videos